What if the world is right?
Or are we in an AI bubble?
Of course. The next financial bubble, it's in AI itself.
It's hard for anybody, even professionals on Wall Street, to tell when we're in a bubble.
And if that's true, is Malaysia right in the middle of it?
Is the AI bubble about to burst? Investors have been pouring money into companies linked to AI.
Ever since tools like ChatGPT burst onto the scene, investors worldwide have been pouring money into everything labeled AI. Much like a modern gold rush, stocks of companies that barely made headlines suddenly skyrocketed just because they had AI in their name. Recall back in early 2023, BuzzFeed's stock jumped over 300% in 2 days after it said it would use AI in content creation. A tiny software company, Big Bear AI, saw many fold in 1 month purely on AI euphoria. But here's the big question. Are we in an AI bubble? And if so, what does that mean for you as a Malaysia investor? In this video, we'll explore the hype versus reality of the AI boom, signs of a potential bubble, and most importantly, how it impacts Malaysian tech stocks and your investment strategy. Whether AI turns out to be a long-term revolution or a short-lived mania, you need the full story to invest wisely. So let's dig in. And don't worry, if you're not a tech expert, I'll break it all down in simple terms so you can understand. The year was 2022, the debut of ChatGPT, an AI that could answer questions, write essays, even draft business plans, almost like magic. Suddenly, AI went from a niche topic to mainstream. Microsoft poured $10 billion into OpenAI, the maker of ChatGPT, betting that AI will be in every software product. Nvidia, the company making the brain or the chip for AI, saw its shares surge 34% in just 1 month, and soon later, the entire S&P 500 was dominated by 7 biggest tech companies as their stock prices skyrocketed. Why so FOMO? Well, AI promises to revolutionize everything, from automating tasks to creating new industries. Some experts predict AI could boost economic productivity on a scale not seen since post-World War II. That's a bold prediction, and it has led to extreme optimism. That's when the money started pouring in. First, Microsoft saw an opportunity and decided to invest $10 billion into OpenAI. In return, it got an exclusive rights to integrate this intelligence into its products. Microsoft Word, Excel, Bing. The idea was simple but world-changing. Every app, every business tool now powered by AI. Then came Nvidia, the company that makes the chips powering all the AI computing. Overnight, it became the hottest stock on Wall Street. In just a few weeks, Nvidia's market cap jumped hundreds of billions of dollars. The CEO, Jensen Huang, suddenly turned into a rock star in a leather jacket, telling audience that AI is the new electricity.
Just like the internet, just like electricity, every country, every company, all needs AI. AI has now part of infrastructure.
From there, things got crazy. Investors started throwing money at anything with the letter A and I in it. A struggling content site like BuzzFeed, its shares soared like almost 300% just because it said it would use AI to write articles. A small analytic firms like Big Bear, its stock went up many-fold in just a month, not because it made more money, but simply because it sounded like the future. And this frenzy, this FOMO, felt like the early 2000s all over again, when companies just added .com to their name and their share price doubled overnight. Only this time, the gold rush wasn't for domain names, it was for intelligence. Every week, there was a new headline. AI will replace lawyers. AI will write your next movie. AI will grow the economy faster than the internet ever did. And just like that, AI turned from a scientific breakthrough into a financial religion. But here's the catch. When everyone's chasing the same dream, it starts becoming a bubble. Now is the best time to talk about our sponsor for today's video, Atome. We all know Atome as a buy now pay later provider. On the first glance, such a product seems more appealing to people who don't have a credit card. Like, if you already have one,
why bother, right?
But what if I told you it's actually a pretty useful tool, even for someone like me who already has access to credit? Atome is accepted at thousands of retailers. It's even teamed up with major brands like Sephora, Zalora, Shein, Zara, and travel sites like Agoda and Klook. Basically, many of the places you already shop. Let's say there's a flash sale. I want to lock in that deal, but my salary only comes next week. I will still get it. With Atome Buy Now Pay Later, I get up to 3 months interest-free on my spending. That means I can check out now and pay off the entire bill gradually later. And yes, that's with absolutely no interest and no annual fees. The best part? If I'm really short of cash that month, I can split the payment into 3 and still enjoy 0 interest. Of course, if I drag it longer, then interest starts to kick in. That's fair. So technically, I'm not using Atome for that. I'm using it to manage timing and cash flow smartly. Here's another hack. Sometimes I use Atome when I know they offer extra voucher or member-only discounts. You pay the same price, but you get bonus perks just because you use Atome.
That's free money basically.
And because everything is tracked in the app, you always know when payments are due, no surprises. So yeah, Atome isn't just for people who can't afford something, it's for people who want to buy smarter. Atome just gives you more control, so use it wisely. It's not debt, it's a money management tool. Now, back to the video. Financial experts are starting to raise red flags. Officials at the Bank of England warned in October 2025 that tech stock prices pumped up by the AI boom could burst. The IMF's head voiced similar concerns, noting that tech stock valuations are approaching dot-com bubble levels. The problem is, not everyone agrees we are in one. Tech bosses, for instance, say this time is different. Jeff Bezos, the founder of Amazon, thinks the current AI boom is an industrial bubble, meaning a surge in investment in new technology rather than purely financial bubble. Bezos does cautions though that during the hype, every company gets funded, good ideas and bad ideas, and investors can't easily tell which is which. Sam Altman, the CEO of OpenAI, echoed the same thing, predicting that people will make some dumb capital allocation in the excitement of this cycle. In plain language, a lot of money will be wasted on goofy or trivial AI ideas alongside with the great ones. To understand what that means, the AI boom today is built on a complex web of money flowing in circles. At the center, you have got Nvidia and OpenAI, the two superstars of the AI era. Nvidia sells GPUs, OpenAI needs those GPUs, and Nvidia in turn invests back into OpenAI, up to $100 billion. Then you have got Microsoft, which poured billions into OpenAI to get early access in its technology, and at the same time spends billions more buying Nvidia chips to power its own AI services. Meanwhile, Oracle spends tens of billions on Nvidia chip to host OpenAI's cloud, while OpenAI signs a $300 billion cloud deal with Oracle. AMD gives OpenAI an option to buy shares in exchange for GPU orders. Startups like xAI, Mistral, and CoreWeave raise funding from the same big tech firms they depend on for chips. It's all connected like one giant financial spiderweb. Now, to be clear, none of this means these companies are dumb or doing something wrong. These are real businesses building real technology that's shaping the future. But what the chart shows is how tangled the ecosystem has become. When the same few giants are investing in each other, supplying each other, and depending on each other's success, it creates what some analysts call a valuation loop. If one company stumbles, say Nvidia's chips demand slows down, or OpenAI's growth disappoints, that shock could ripple through the entire system. Microsoft investment value drops, Oracle's cloud demand weakens, AMD stock slides, and suddenly, what looked like unstoppable growth could unravel like a house of cards. That's what dumb capital allocation can mean in this context. Not that these firms are dumb, but that so much money is chasing the same dream in the same circle that one tiny mistake could trigger a massive correction. And if history has taught us anything, it's that when everyone believes something cannot fail, that's when the cracks usually start to show. So, what has all this got to do with us here in Malaysia? A lot more than most people realize. Because when you trace this AI web further downstream, past OpenAI, Nvidia, Microsoft, and Oracle, you eventually find that the physical backbone of this entire AI revolution is being built right here in our own backyard. Every AI model in the world, from ChatGPT to Gemini, runs on billions of microchips. Those chips don't just come out of thin air. They are designed in the US, manufactured by TSMC in Taiwan, and then crucially assembled, packaged and tested by companies in Malaysia. That's where our OSAT industry, which stands for Outsourced Semiconductor Assembly and Test, comes into picture. Penang, Malacca and Ipoh are home to some of the world's most important semiconductor facilities. Names like Inari Emertron, MPI, Unisem, Karsem. These are the quiet enablers of the global AI boom. And that's why what happens in Silicon Valley, the capital flows, the valuation, the hype, eventually trickles down to us. Whether it's a boom or a bust, we are part of it. If Malaysia is now part of the global AI value chain, who actually benefits? And more importantly, should Malaysian investors ride this wave or wait until the bubble bursts then go in for a bargain hunting? Let's start with the obvious winners. When Nvidia sells record-breaking GPUs, somebody has to package those chips, mount them onto circuit boards, and make sure they don't overheat when crunching billions of AI computations. That somebody often sits right here in Penang or Malacca, in factories run by Inari Emertron, MPI, Unisem, Karsem, so on and so forth. These companies make up Malaysia's OSAT ecosystem. It's not glamorous, but it's the plumbing of the digital world. If AI is the new electricity, these are the electricians making sure the power doesn't trip. Take MPI for example, which quietly handles advanced chip packaging for automotive and industrial clients. MPI has been investing heavily in next-generation packaging, the kind used for high-performance AI processor and memory modules. And while its share price doesn't swing as wildly as Nvidia's, MPI represents something deeper, the steady backbone of Malaysia's tech industry adapting to the AI era. And then there are companies like Franken, the cleaning specialist. It might sound mundane, but in semiconductor production, even a microscopic speck of dust can ruin a chip. Franken's precision cleaning services keep chip-making machines in top shape. And as AI chips orders multiply, its business scale right along with it. See the pattern here? These aren't companies building AI software like ChatGPT. They are the picks and shovels of the AI gold rush, the engineers, the machinery, the process experts behind the scene. And here's the good news. Malaysia's positioning in this AI hardware ecosystem is very real. Instead of being hyped up by financial demand driving up their share prices, our semiconductor industry is really fundamentally strong, contributing over 13% of global OSAT output. That's why even Intel and Infineon are expanding their facilities here in Malaysia. Even more telling, Nvidia itself is working with Malaysian partners like YTL to build green AI data centers in Johor. Before you take out your notebook and start writing down all the stocks that I've just mentioned, let's remember what we talked about earlier. The AI ecosystem is now a tangled web of cross-investments. Let's be honest, when bubbles form, everyone looks brilliant on the way up. Orders flood in, profits grow, and every headline reads like the future is guaranteed. But when the music stops, the hangover hits hardest for those closest to the dance floor. And Malaysia's OSAT sector is right in the middle of it. So, what could go wrong? We've seen this before. During the smartphone boom in the 2010s, OSATs expanded aggressively. And when handphone demand plateaued, profits collapsed in 2 years. The same cycle can repeat in AI. This time round, if you start to see a slowdown at the top, let's say Nvidia, AMD, Apple, and companies of that size, they don't just dent sentiment, it directly cuts orders in the entire supply chain of the tech industry, including our Malaysian tech companies. Here's another red flag. Valuation. Some Malaysian tech stocks are trading at PE ratio of 2 to 3 times higher than their historical average, simply because investors have priced in AI exposure. That's fine while optimism lasts, but if global investors rotate out of tech, or if AI hype cools, this lofty valuation will correct quickly. Don't believe me? Just look at what happened to glove stocks during the pandemic. Once the pandemic was over, all glove stocks just went crashing down. The point is, don't confuse momentum with value. Ask yourself, are profits growing as fast as the share price? Can the business sustain if orders drop, say, 10 to 20% within 6 months? The Malaysian tech scene is full of capable companies, but not all will be winners of the AI era. Your job as an investor is to figure out which ones are building the future and which ones are just borrowing the story. For you, the smart move is to stay curious but cautious. Enjoy the ride, but don't get swept away by hype. Invest in what you understand. Keep an eye on the fundamentals and be ready for twists in the tail. Whether AI changes the world as dramatically as promised or not, having a clear, level-headed strategy will ensure you are not just gambling on buzz. After all, investing is a marathon, it's not a sprint, even in the age of AI. Thank you for watching. If you like this video, give it a like and subscribe for more insights on market trends. Got questions or your own thoughts on the AI bubble? Drop a comment below. I would like to hear from you. See you in the next video.